Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the strategies to cope with FX volatility. Following CBN's announcement on the 26th of October 2022 to redesign selected Naira notes, the Nigerian foreign exchange FX market experienced significant volatility. This triggered huge speculation and led to the depreciation of the Naira to over 900 Naira to $1 from 760 Naira to $1 when the decision to redesign the notes was announced. As of Friday, the Naira has appreciated by 28.6% to 700 Naira per dollar due to profit-taking and speculations that the CBN will increase the dollar supply to the economy. Amid the instability in the parallel markets, the Naira remained stable at the CBN's official window, investors and exporters window, closing at an average rate of 436.5 Naira to $1 as of Friday. This created a spread of 236.5 Naira to $1 between the parallel market and the official market. In periods of high FX volatility, investors can be exposed to risks. We recommend the following strategies for investors and businesses to manage their exposure. 1. Avoid investing in dollars during periods of high volatility within days, especially when there is a significant premium between rates at the parallel and official markets. This means that you should not invest all your funds at once. For businesses, only purchase exactly what you need to settle your current obligations. These sharp movements are largely due to speculations and could be unsustainable. If you have invested, the advice is to hold the investment for the long term. 2. Invest in tranches, average up or down when the uncertainty is high. No one can certainly gauge how high or low the rates can't go before a reversal. Hence, buying in small bits will help you average up or down. This also applies to businesses. If you have pressing obligations to settle, you should purchase in bits depending on the time frame available to settle the obligations. 3. Buy or invest more when you observe rate stability for over 2 to 3 days, as rates could steadily appreciate afterwards, depending on how much intervention is seen from the CBN. Also, given that the FX problem is far from being solved. Even though the Naira has recovered somewhat in the parallel market, there seems to be no reprieve for the currency anytime soon. The CBN has continued to manage demand and FX allocation because Nigeria's gross external reserve is low and has declined by 8.9% or $3.3 billion year to date due to huge oil theft. The major boost for the external reserves in the past 2 years was from federal government's issuance of Eurobonds and multilateral loans, but that is not an option given the high interest rates globally and the country's credit rating downgrade. Besides, Nigeria can't continue to rely on borrowings to meet its FX needs given its worsening debt sustainability. In the short term, stabilizing the exchange rate will require increasing oil production to boost exports and attract foreign investors. Long term, Nigeria must diversify the sources of its FX supply by boosting non-oil exports to have a chance at a stable or appreciating currency. Thank you for listening. Please join us same time next week for another exciting and insightful session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.